All right. Hey, everyone. Mark here. Thanks for joining me for another Greenbridge market analysis. So this is an update from earlier in the week. It's generally a little bit of a quieter market. Also, it's raining a lot here right now, so if there are any internet connections, I apologize. Hopefully, if there's any problems, hopefully there won't be. Anyway, so if you're new to the stream, and you'd like to see a market or a stock or a coin or whatever, please share it in the chat now so that once I complete my portion of the analysis, I can go over your symbols. I'd like to spend more time on symbols that people like to see. Okay, so with that being said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, so first thing, what we're going to do here is we're going to go over Bitcoin. Then we're going to take a look at the stock market, and then we're going to take a look at gold and the dollar. Those are the main markets that I like to evaluate each week. Again, this is an update from the session that I had on Tuesday, and the idea here is to see how the charts have changed and what clues they're giving us for scenarios and risk that we can anticipate over the next few days. Okay? So let's begin here with Bitcoin. We have a sell signal now in play. The sell signal was the break of this candle low here, 33.8 basically, yesterday's candle low. That was taken out, and there's a sell signal. Now this seems to be mimicking the stock market situation, which, all right, maybe it's a coincidence, maybe not. Oh, and by the way, someone in our active investor chat put a question, which I can't remember now. I wanted to answer that question as well. So if you're in the active investor chat, and you see the question, I think it was Kay Collins put the question in there. If you could just share it in this chat here, I'd like to answer the question. I just can't remember what it was. All right, anyway, so this Bitcoin situation. Yes, there's a sell signal in place right now, but that does not necessarily mean you react to it, okay? So we have some people that are long. We have a swing trade that we sent out the other day. And hey, Mario, thanks for joining me. We had a buy signal off that pin bar. It was an aggressive long. We sent it out as another alternate trade. So there are some people that are probably in that trade. And what I said earlier in the chat room was when you see the sell signal, we've had two of them so far, right? Today was the second one. That's an opportunity for you to decide if you want to minimize your risk or if you don't want to assume the full risk of the trade. Now is your time to make that decision, okay? And maybe take a smaller loss or whatever. Or if you want to leave it up to the market, which is usually the better thing to do, even if you get stopped out, well, we have a stop in place for that. So you let the market go to the stop and it makes the choice for you. Okay? Now, the reason why that's usually better is because there will be many times when it reacts, people react to it and then it reverses back in everyone's face and this and that, and it was just nothing but a fake out. You have to understand something about charts, which a lot of people don't understand, is it's what you see is not exactly what you get, okay? We are all wired to react to our environment, okay? That is how we are wired for the physical environment. But the market is not a physical environment. It's an abstract environment. We can't actually see what's going on inside these candles. We assume that, oh, it must be a lot of selling activity because the candle is red. But how do we know what orders are at the bottom of that candle, right? And whose accounts do those orders belong to? And how much money is in those accounts? We can't see that. If we had that information, then we would probably have a much better idea that price will hold that 32K or 31.5 or 30K because we can see the money sitting there, but we can't. So we have to guess. As market timers and retail traders, we have to guess, and we have to wait for certain information to help confirm that incomplete information. Okay, so my point is you cannot react. In this situation, with this red candle situation, you're going to get a lot of big mouths and they're going to be overreacting. They're going to be, oh, Bitcoin's going to 20K, oh, Bitcoin's going to 15K, blah, 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 blah. You're going to see a lot of that nonsense. Now, a lot of these people, they're vendors, so they like to make dramatic announcements or whatever because they're trying to gain customers. I mean, that's just what they do. It doesn't matter if they're right or wrong. They're just trying to get customers. But you cannot be swayed or distracted by what someone says, especially someone that's trying to get customers. Now you may look at me and say, well, aren't you trying to get customers too? Well, sure, we have a business where we have a signal service and this and that. But I'm not making any dramatic predictions here at all. All I'm saying is don't react to the candle. There's a sell signal, 30K still holds. That's the support that we have to assume will hold unless it does not hold, okay? Unless it breaks, but we don't have evidence of that right now. The only thing that we can say is there's a lower high at 41K, and that structure dominates this consolidation, which means a lower low is more likely than a support to hold, but the market may prove otherwise. So if 30K clears and we see 28.5 and that gets cleared, then we're looking at 26K. That's it. That's not a prediction. That is, the market must prove this. And if some people want to take the risk and they want to go short and bet on that scenario, that is a realistic scenario, okay, as long as they know how to manage their risk. We don't short Bitcoin. We don't plan on starting to short Bitcoin because it's just not in our strategy. So, and that really makes things a lot simpler. All we have to do is wait for long signals. Sometimes they're not going to work out. Like in this situation, it's been tough because we keep flirting with the support. But if this 30K holds and continues to hold persistently, at some point, these shorts will be squeezed. Okay, and the first thing we're gonna see is this minor resistance of 35K or 36K. It's gonna be cleared dramatically. Okay, and then of course in that situation, all these same big mouth bears that are like, oh yeah, we're gonna go to 20K. These same authorities are gonna be yapping about, oh, we're gonna go to 40K now. We're going back to 50K, right, by next week. Again, don't listen to people. So right now, that's all we can do is wait for the market to make a choice. Maybe we'll get a higher low over the next few days. This would be an ideal location for such a formation. And that would prompt another swing trade idea for a long. Okay, I mean, based on the rules that we follow. So we focus on the rules. We don't focus on feelings or reactions to things. We accept the fact that we cannot see what's actually going on inside these candles, as much as people like to fool themselves and think that they know what's going on inside these candles. Okay, so those are a couple of things I wanted to point out there on Bitcoin. Just have to be patient with this. It may clear 30K, but it also may not. Only the market can make that choice. All right, so that's Bitcoin. Let's move on here to the stock market. Again, if you have questions, this is a great time to ask a lot of questions because I'm not simulcasting on TradingView. And so we have a smaller group here. So it always gives me an opportunity to answer more questions. Okay, let's take a look at the Nasdaq. All right, now this thing has been very tricky. Now look at today's situation, right? Earlier today it was much more dramatic. We have a 300-point range candle today. Now it started out pretty weak. It took out the lows of the previous few days in one candle. Now, what does that tell us? Well, the vulnerability is starting to show itself. Now, we saw signs of this earlier in the week, but the signs that we saw weren't enough to actually take trades on. I mean, you know, we always talk about taking risk in the face of incomplete information, but sometimes information is too incomplete, and it's very hard to measure risk with that. So in those situations, we'll consider them red flags. And I talked about it yesterday. I talked about it the day before. And I had no interest in stocks around these levels. In fact, on the show yesterday, Talking Markets, I called Aussie dollar, or actually I called pound dollar long, but then we agreed on Aussie dollar short, which seems to be, it's in play now. But the point is, I went for Forex because I don't like swing trades in stocks right now. This is a really bad area for longs. And as you can see, it's starting to develop. Now, so we have this large candle. It's trying to recover into a bullish pin bar. We've been seeing this over and over again where buying just occurs at some bottom and they just start buying it all up, right? Look, S&P, let's take a look at the S&P 500. Here's the S&P. Same situation. Well, this is not as nice looking as the Nasdaq. That pin bar isn't as large, but it's a red outside bar. This could be the beginning of a broader pullback. Now, what does that mean? Am I calling for a bear market? No, just a healthy pullback. We have not seen a pullback in these markets in about, what, almost a month? At least 2 or 3 weeks here. I mean, look at this, green candle after green candle after green candle after green candle. That's not normal. So, especially when you're at extreme highs, like these are all-time highs. I can understand if we were coming off of a low or something, but these are not lows. These are higher lows. These aren't like market lows. They're support levels now. So anyway, for the S&P and Nasdaq, I'm looking at a test of supports. That's what I want to see if I'm going to be interested in any swing trades in stocks. Right now on the S&P, that means 4250 area. All right. Right now we're at 4316. That's a good 70 or 80 point move in the S&P, which is pretty big for the S&P. It could do that in one day. It's possible. But that's your first support. If it clears that support, then we're in sell-off mode, okay? Which again, that type of situation could take a few weeks to develop. So back to the Nasdaq, right? Similar situation. Now, we have a reference point for the low, which is 14.5. So if 14.5 is cleared overnight, I notice a lot of these moves begin at like 5 a.m. Eastern time, okay? I guess in the European markets or whatever, in the other markets in the world, some kind of decisive whatever goes on and sets the tone for the day, right? I've noticed that recently. Anyway, so we take out these lows, then this thing is probably going to go for 14,200 or 14,000. I mean, those are the supports on the Nasdaq. So what does that mean for us? What does that mean for swing traders? Well, that would be the opportunity to be looking for new swing trade longs in stocks at those support levels if the Nasdaq can reverse itself and not just keep going. That's what you have to watch for. You don't just step in front, okay? So we have, Andrew has a bunch of stocks on his radar and stuff like that, looking for that type of situation. He was also very hesitant to get onto too many stocks because of this same situation. As the market keeps going higher and higher and higher, that risk of retrace keeps increasing and increasing and increasing. So you don't want to get caught in that. Only people who are unaware of this relationship with the broader market, they just buy complacency because they're buying into some news that comes out. They're just reacting to some information. That's the wrong thing to do. Unless you're gambling, then that's different. Then you're gambling. But I'm not promoting gambling here. So anyway, so that's the situation. These things, this may be the beginning. Now, at the same time, some people ask, well, is this a good time to short? Well, it's better than, at least it's more of a reason than what we've seen recently. But, and you can measure your risk from here, but this is not exactly a clear signal, right? It's just a beginning of sort. We need to take out that low. Okay, if we could get like an inside bar tomorrow, and maybe early next week we start taking out these lows, then that would be a clear sign. All right, right now you can say the aggressive short is within reason, and you'd be measuring your risk from the highs. And again, it's a counter trend trade because this trend is not bearish, right? So while we are anticipating a broader pullback, when you're fighting a trend like that, the chances are lower. Until some point it'll come along, but it's very hard to get into that time when it gives you that big move, right? We haven't seen a big move in a really long time. Anyway, so that's the Nasdaq and the S&P. Now, hey Schwartz, I got Schwartz from Romania. What do you think will be a better investment? Okay, so I'll get to that. It's a good question. Thanks for asking. Again, if anyone's in our chat room, someone put a question in there, and I can't remember the question. So if someone could just put the question in the channel here, I'd like to answer the question. I apologize for not remembering. I usually remember. So anyway, if someone can do that, that would be cool. All right, let's take a look at gold real quick, okay? So here's gold. Now look at this. Gold has been tricky. I've been careful not to call any new trades in gold in particular, because I wanted to see how it behaves after this break of this recent resistance at around 1785. This is a bearish pin bar right now. So we take out this low of 1794. We take that out tomorrow. There will be a new sell signal in gold. Now that's strange because I thought we were having inflation, right? Okay, so you can't let logic get in the way of these things. If this thing wants to sell off, that's what it wants to do. And the bearish pin bar is a sign, right? That's a signal it needs to activate. So it needs to take out that low. Otherwise, it doesn't mean anything until it takes out that low. Now, So when I see this gold situation, I want to look around. Well, what are some economic factors? I don't trade on economic factors, but I'm just curious. What's going on in the bond market, right? Bond prices higher. This is a nice strong breakout and follow through. No fake out here. Higher bond prices, as we know, means lower yields. Lower yields means weaker dollar, right? But, okay, so we got the weaker dollar today. See this? Yesterday this dollar was strong, and now we're getting this little weaker dollar situation today. Now, this is not a bearish situation in the dollar just yet. We just have an inside bar. This could turn into a sell signal on the dollar, but you can't get all wrapped up in the signal by itself. Okay, you can't get all wrapped up in one candle. You have to look at the context around that candle. We have a higher low on the dollar at 92. So if this thing doesn't break 92, you're just going to look at a consolidation and then a break higher. Okay, so we have to keep an eye on that bond market. I mean, the bond market broke out. If it continues in that way, then right, we should see lower yields. Okay, but I'm sorry, I said something confusing. We should see lower yields as a result of the rising bond market. Lower yields, right, should be weaker for the dollar. Okay, and that's what we're getting. But if that market, if the bonds turn, and all it takes is the Fed to come out and say something that wasn't expected, or some other type of economic catalyst comes out of nowhere, which the chart will not warn us about, then this whole thing changes. So keep an eye on the levels. Don't rely on logic, because logic can get very out of sync, okay? And that screws up a lot of people, because you get married to these opinions. And the opinions, you know, you may say, oh, gold has to do this, or silver has to do that, or oil has to do this. They don't have to do anything. They're going to eventually, the relationship will catch up, but it may stop you out or margin you out first, because it can do that, right? So that's what you have to look at, the risk. Anyway, so we have to see how this dollar plays out. But if the dollar continues lower, we should see a stronger gold, not a bearish pin bar. So again, that's conflict. Okay, stronger dollar should mean weaker gold, not weaker dollar. So anyway, that's why I just like to check that out, because I want to know, what are the chances that a sell signal here follows through? And with that dollar situation, it's not a very high chance that this thing is going to follow through and start pushing lows. So do I want to be in a hurry to short this thing? No, I'm not going to short gold. Instead, I'd rather wait for a new buy signal to develop. So just because we have a pin bar doesn't mean it's going to follow through, right? Same with that Bitcoin situation, like I've been saying. Just because we have a sell signal doesn't mean 30K support will be cleared. We have to let the market prove that. All right, so those are the main arguments that I wanted to make here on these markets, just to update from what I was talking about earlier in the week. Again, the whole goal of these analysis sessions is to gather clues from the chart and formulate reasonable scenarios that we can measure our reward risk from. Okay, so if we want to take a trade or not, you know, at least we'll have a sense of what's realistic and how much risk we want to take. These are the building blocks of putting a trade idea together. So let's take a look at some questions here, right? I want to start answering some questions. So Nita wants to know about the euro. All right, so good question, Nita. So we sent out the Aussie dollar trade earlier today, which activated. It was a limit order. So I talk about that because, again, it's against the dollar. So here's the euro against the dollar. Now, we just take a look at that dollar index chart, and it's the inverse of this, right? The dollar was showing us a red candle. So the euro against the dollar is showing us a green candle. This is actually a buy signal here. Why is this a buy signal? Well, a couple of reasons. For one, this low that it made here is not much lower than this low over here. So it's kind of a failed low situation, especially after this bullish pin bar attempt. So it's trying to reverse, and you have another low over here. Now, this broader trend, if I zoom out a bit, the broader structure is still generally bullish. I mean, this structure is anyway, so it may try to correct that. Now, again, the dollar is tricky, right? So what you have to watch out for with the US dollar, which is going to affect this thing, is if that dollar makes the high or low at 92, you're going to see a lower high around here. That's what you have to watch out for. So is it worth taking a chance long on the euro? Well, what's the risk? If you look at the low here, 1783 is the low. This thing right now is at 1841. You're looking at about 50 or 60 pips of risk if you took this thing now. I mean, that's typically with these Forex trades, we're looking at 100 pips of risk. That's a reasonable amount of risk based on the way these things move on this time frame. If you're not comfortable with 100 pips, you probably shouldn't be in these things because, you know, you most likely will get stopped out if you put anything tighter. And it's very hard to day trade currencies, these Forex pairs, especially with the ridiculous spreads and other costs that are involved. So anyway, so it's an aggressive long, but if it turns somewhere below this high, which is basically 1950 area, if it turns and we get a sell signal there, then it will turn right back into a short idea. Okay, because that would be more in line with the broader US dollar trend. So something to keep an eye on there. Because remember, when you're dealing with these Forex pairs, you really need to pay attention to the both sides of it. And when it comes to the cross pairs, you know, that are against the dollar, the major pairs, you got to keep an eye on that dollar and the bond situation. Because again, someone can come out and say something, or some economic report comes out, and then the perception completely changes. It can happen very quickly. So just something to keep in mind there. You don't want to trade on that information, but you do want to use it to help you gauge risk in relation to the levels that we're looking at. Okay, so that's the euro. Thank you for asking. Okay, so Schwartz, let me get to your question here, Schwartz, and thank you again for joining me and my family over there in Romania, my Romanian people. I always appreciate you for checking me out here. Thank you. Okay, so what do you think would be a better investment? Okay, if Bitcoin goes lower more than ETH or BTC, and would it be good now or better wait for? Okay, so that's a good question, Schwartz, and that's more of a position trader question. Now, so here's the thing, right? As far as investment goes, we'll assume that investment as an investment, you're looking at multiple months, maybe even years, as far as your holding time for something like this, right? So in this situation, when it comes to investing, the focus is really less about the levels and more about your size. So generally, Bitcoin is near a low, okay? So this is not a bad place to be taking bites. Now, whether it's Bitcoin or Ethereum, it's pretty much going to be the same because they're both, either one or the other is the leader, and Bitcoin pretty much is the leader. But I mean, let's take a quick look at Ethereum. But I mean, they're really not going to move. They're not really going to separate from each other, right? Here's Ethereum. So Ethereum tried to push a little further than Bitcoin, but look, it's red. So it doesn't go very far without Bitcoin, and that's the way the behavior has been. That doesn't seem to change. At some point, if it changes, we adjust. But we can't sit there and second guess that, right? We have to just go by the relationship that exists at the moment based on the evidence that the market continues to provide. So to answer your question, we're near a low. So taking on small bites or a small bite near a low is not a bad idea for a long-term investment. I mean, Bitcoin, if you're going to do that with any of these things in this space, Bitcoin or Ethereum are probably good choices, because they are the leaders and they're pretty much they lead the whole space. I'm against it when you talk about garbage coins, you know, like you know, these V chains and all these other big idea coins that don't produce anything. I'm not a big fan of long-term inventory for those, because those are like lottery tickets, okay? But Bitcoin, while it is highly speculative compared to other assets like stocks, if you're going to do it, at least, you know, Bitcoin's a better choice. I mean, we know that the supply of coins in circulation, we know there's a limit on that and all that other stuff, right? So, and it's the first one in the space. I mean, there's a lot of good reasons why Bitcoin should continue to lead in the future, unless something seriously changes, okay? Now, so to answer again your question, this area is not a bad place to put on a small bite. Now, the thing to do is have a plan as far as how much money you're going to invest. Really, that's more of the object here. So I'm just going to use an example. Let's say you have $1,000 and you say, look, I want to invest my $1,000. Where should I do it? How should I do it? Well, you're going to break that up. You should break that up into 10 $100 purchases, okay? And you can do it by time, like first of the month, 15th of the month, you make your purchase no matter what the price. And you're going to have an average price over time. You have 10 purchases. If you do that 1st and 15th, over 5 months or whatever, you'll have an average price. Or you can wait for more attractive levels. The 30K area is one general attractive area. If it breaks to 26K, you put on another purchase. In fact, what you can do is if it breaks to 26K, instead of buying a $100 increment, you buy $200. Why? Because it's a much better price. All right? So you want to wait toward, you want to put a heavier weight on lower prices. But the reason why you want to have a limitation as far as your investment amount is because what if this thing goes to 15K? Now, there's going to be some big mouths out there that are calling for 15K and 10K. Yeah, I know, I understand. They're looking for customers. But the thing is, anything is possible. So you need to protect yourself in case something like that occurs. How do you do that? Well, if you only have 1,000 to invest, or that's your allotment size, your objective allocation, or whatever you want to call it, right? And you're all in, and this thing's pushing 20K. Well, you don't keep putting more on if you have your full 1,000 invested. You don't keep putting more on. What if it goes to 10K, right? You wait for stability at that point. That's the point of having a limit of how much you're going to invest. That limit is going to really be dependent on your own personal situation. Some people may have 50,000 to invest. Some people may have 100,000 to invest. And you have to basically break that up into, you have to think of more of an average price, okay? So that's how I would handle that situation. So again, these are not, keep something in mind, 30K area, whether it's 33K, whether it's 35K, whatever, that doesn't matter. This is still near a low. You're nowhere near a high. Right now, the recent high is 41K. So the other thing to consider too is you don't always have to do it on lows. If this thing breaks out and we're pushing 41K and you want to take a small bite on the breakout, there's nothing wrong with that either. Now you're just buying something where the momentum is changing and it's going more your way. But when it comes to averaging, it really doesn't matter. It's just you can take advantage of lower prices when they're available. And if they get really extreme, it's nice to have some money on the side to take advantage of that with. All right. So anyway, I hope that answers your question. Okay. So hey Kev, thanks for sharing the question there. So curious how Amazon. That's it. Amazon. That I'm trying to remember. I'm like, what was Kevin's question? Or what was this guy's question? Amazon. And its trajectory, of course, the face of them. Okay, so let's take a look at Amazon. Right? It's a very good question. Now, look at it. Now, Amazon has broken out recently. And this, obviously, Amazon is a leader of the Nasdaq. It's one of the main FANG stocks. And this is what has, I think, been distorting the Nasdaq. Keep something in mind. The Nasdaq 100 is made up of the FANG stocks plus a bunch of other stocks, right? Only 100 of them. The S&P has 500 stocks. The Dow has 30 stocks. So if a small group of these heavily weighted stocks do something like this, okay, if like the FANG is leading the way, it's going to distort the reality of the market, because if the majority of stocks are not going anywhere, or if they're selling, right, then the market's going to look a lot stronger than it really is. Amazon is just one stock. So look at this thing today. It's up, what, 42 points? And obviously it's probably the reason why the Nasdaq held up, because this thing is strong for whatever reason. So it doesn't matter the reason why. People right away, they grasp for control, and they usually grasp for news. Why? Doesn't matter why. What matters is where. So Amazon's on these highs. You're going to see a lot of hype and a lot of nonsense about this. I mean, is Amazon a bad stock? No, it's not a bad stock. But I am not interested in Amazon at highs. And it's throwing the Nasdaq off, in my opinion. So nothing to do here, except that, look at the other FANG members. Google. What's Google doing? Google's trying to be a little green today after pulling back off of its high. What about Facebook? Facebook, not as enthusiastic as the others, but they're not pulling back dramatically yet either. Okay, what's another leader? NVDA, they're not part of FANG, but this is a semiconductor leader, pulling back a bit, bearish pin bar today. So, I mean, look at this nonsense. Why do I call this nonsense? because I mean, it's like in a straight line. There's just no pullback there. There's a lot of hot air in that. Okay, so that means when you do get the pullback, it will probably be dramatic when this hot air comes out. Meaning, it's just a lot of low volume, short-term traders that bought into this, and you don't really have any heavy money holding this thing up. Okay, usually when you get these type of moves. So, I mean, that's just the theory. It could be wrong, but I don't like when these things go vertical like this. Pretty much, in the face of a market that's very mixed, I become very skeptical and very cautious. I don't like to buy highs. Okay, so anyway, but look at the leaders, right? So Nvidia. How about AMD? AMD's a leader. Okay, AMD trying to be green today. So in the face of that red Nasdaq, you have these stocks that are trying to hold up, but I'm not buying it. Okay, I'm not buying it. The market hasn't pulled back. We've seen a lot of strange behaviors and red flags. So this thing could just lure some people in today, and next thing you know, taking out lows again. So I can't really say much more than that, except that if you're in Amazon, hopefully you're locking some profits in. I hope, because this would be a good place to lock in profits. How much higher is this? These things can't maintain this type of vertical, rate of change. I mean, it's steep. So, markets are usually more tame than that, right? So when things get out of hand that way, for whatever reason, you have to be cautious. How many altcoins have we seen go vertical like this? And then over the next few months, we see where they went, right? It's the same idea, even though Amazon's not an altcoin. Okay, so thank you for asking about that. Just have to, what I want to see is when Amazon pulls back, what I want to see is how far does it pull back? Does it pull back to this old resistance, and does it hold and give us a higher low of some kind, or some kind of structure, which would be a positive for the broader market? Or does it clear it and start clearing supports, right, out of which no one would expect? If it clears the supports, then I know this market is just made up of nonsense. And then I'd be anticipating more of a broader move in the index, okay, in the Nasdaq. Okay, so thank you for putting that question. Okay, Kev, Jamia at a good level. Okay, so Kev is asking about Jamia, J-M-I-A. Let's take a look. So now, see, this is a little bit more of a, look at this situation on Jamia. Remember when Jamia was like the thing, right? Everyone was Jamia, right? Jamia, look, vertical, blah, 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 great. And then it spends the next, what was that? Back in February peak, okay? We are now in July. It has not gone anywhere near there since. That's why I don't like buying highs. I don't care what the hype is. I don't care how positive the news is. That's the worst information you can consume, because the people that are in from the best prices are selling it to you, okay? And the best prices are at the bottom, not at the top. So, and we don't know where that top is going to be. So now, here's the thing with Jumia. Yeah, we have there was an improvement in the structure, right? But the thing is, there's this little mini double top situation. It never took out this resistance. It never cleared it. So this bearish or consolidation type of structure is still in play. It also took out this higher low support, which it should not have done. It should have maintained it. Now, it's trying to give us the failed low. Okay, fine. But, if you're going to take a risk, I'll give you that. If you're going to take a risk, this would be the place to do it. But if this next candle, tomorrow or early next week, we take out the lows of this, then I'll just take the loss and let this thing find its new level, because this structure is not very optimistic based on what it's showing us right now. Okay, in order for this thing to improve, it needs to clear this resistance, which is 33.5. It needs to clear that. If it clears it, now we have a bullish structure that's in play. So this could be the very beginning of it. This could be the very bottom of that. You have to be willing to take that risk, right? And if it doesn't work out, hey, at least you weren't buying the high. That's the way you have to look at these. Timing markets is not about being right. It's about keeping your risk under control and respecting the risk. So if you lose $1 or $2, hey, that's okay, because this thing could pull back another $10, right? How many stocks have we seen where you get stopped out And that stop saves you a ton of money, because if you had stayed in, the thing gets cut in half or even further, right? We've seen that a lot. I mean, look at gold recently. Anyway, okay, so Kanak from India, hey, welcome. Cool, I appreciate that. Can you look at India's stock market? Okay, sure, let's take a look. The major index here, let's see what we got. So this is interesting. It looks very similar to the Dow, right, in the US, where it's been, the general trend has been like strong higher lows and higher highs all over the place. Now, it's been getting hesitant up here. As you see, it's been consolidating. This kind of consolidation for me is a red flag. And on top of that, you have a bearish candle close today, which could be a reaction to what's going on in the US market. But you have this common resistance up in here, okay, which is what, 15.9, right? This area right here. You have that common resistance. Now, you have higher lows going into that resistance. A lot of times when you get that situation, people will start jumping into this short a little early, right, and it squeezes them out. So in order for this thing to really confirm that it wants to sell, it needs to take out this support. Now, you're going to have a little range of support here. It's not going to be one specific level. That range is going to come from here. So you're looking at, what is this here? 15,450. What's this high over here? 15,431. So basically 15,450 area. That area, if price can clear it decisively, meaning you get a strong bearish candle close at that point, that could take a few weeks, maybe even, or at least a few days for that type of scenario to play out. Then you can at least confirm that supports are being broken, which is not something that should happen in a strong market. And you can then look for a lower high if you're interested on the short side. But if you're long, maybe you're long stocks, this is a warning. This is a red flag to hopefully you've reduced your exposure, you've taken profits off the table. Because again, just because we can identify the supports doesn't mean the market's going to stop there. It might stop there, okay? There's a chance that it stops and reverses there, okay, fine. But there's also a chance it can clear it. And that can be the result of a catalyst that is unknown right now, okay? The charts can't help us know what kind of catalyst comes out in the future. It could be a political move, it could be whatever, right? So, and that can break that support. So all you can do is look at the risk. So this is a risky area for longs. It's an aggressive place for shorts, right? You want to short this. There is a sell signal there. You're going to have to use the high of 15, basically 15.9, or you want to do 16 even, or just over 16 for your stop. That's an aggressive short, okay? Why is it aggressive? It's counter trend, all right? But, it has some nice potential if you get some follow through on that. Okay, so I hope that gives you some perspective on the Indian stock market. And thank you for asking. Okay, so what other questions do I have? Let me see. I have some time here. So any other questions about any altcoins? Someone the other day asked about AXSUSD. How's this thing doing? Let's take a look. AXSUSD. So and Andrew pointed out yesterday during the show that this was a NFT, something related to NFTs. Look at this nonsense. Now, this is what I mean about the vertical, right? The person was asking me, what do I make of this, or what's going on? And like I said, most likely when you see vertical action like this, keep in mind, this is the herd mentality, right? The herd mentality on steroids. It's usually stimulated by a chat room somewhere. When it comes to these garbage altcoins, it's usually stimulated by some kind of chat room. They're putting out some kind of information, and they're getting everyone to buy this thing, right? Especially if there's a low float of coins or whatever the deal is. I don't know what the circulation is, but you can get it going. Now, people that get stuck at the top, now you're stuck with this. Okay, so what was the high on this thing? 1669, and where is it right now? It's just about 12, just a little bit below 12. So that's what I mean about the risk of retrace. No one saw this coming. I'm sure the chat room people were saying this thing's going to go to 20 by tomorrow, blah, 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 right? Never listen to people. This is what you're facing, all right? And now the risk on this thing is very high because you're looking at a potential support at what? Basically 895, and then you have one here at like 450. It can go there very quickly, all right? Especially if this was a bunch of hot air and hype, which typically these things are, right? And people were getting confused with this because they were saying, well, why isn't it following Bitcoin? They don't all follow Bitcoin, but most of them do, right? But sometimes you get something that gets out of hand like this, and that's usually a result of hype, news, whatever, and that's not a good idea to get involved in, okay? Usually you just want to stay away from them. It's the easier thing to do. So Nita, what do you think of NVIDIA puts? I have some and wondering if I should keep it for, okay, that's an interesting question. NVIDIA puts, Nita. I mean, that's definitely aggressive. NVDA, okay. So what strike price do you have and how much time do you have on them? So, I mean, look, it's a counter trend idea, but I can tell you one thing. If you just want to go by support levels, what are the potential supports? You have one right in this area right here. What is that? 741. And this thing right now is at 792. That's your first minor support right in this area. So you can even round that to 750, right? After that, I mean, you have another minor support right here. What is that? 712. So it's best to round these numbers. So you're looking at 750, 7 even, and then you have this one, okay, at 650. So what you're playing here is the Nasdaq. This is basically the Nasdaq. So if the Nasdaq continues lower over the next few days, I mean, this thing has plenty of room. One thing to consider, especially if you have multiple, if you have more than one, it doesn't hurt to take some money off the table if you're green. Again, I don't know how much time you have in your options, but it's very hard to be long options, whether the long or puts, because the theta decay has been very high, very hard to be long. So when you have a profit, it's usually a good idea to just take that money as quickly as possible. Now, so if you have multiple contracts, right, I would say it's not a bad idea to lock in one maybe or two. I don't know how many you have. If you only have two, then lock in one and then see how far the other one can go, because the potential is on your side. Okay, the trend is not, but the potential is. This thing can pull back a couple hundred points relatively quickly. All right, if the Nasdaq cooperates with you. Now, especially since, you know, Amazon and Google and a bunch of those, they're trying to be all stellar today, and meanwhile this thing is off of its highs, which means it's acting relatively weak. All right, so you do have that in your favor. You might as well give it a chance. If you know, again, if you have a couple of contracts, just keep in mind it's a good idea to take something off the table when you're green, especially with long options. Okay, so good question. Kev, okay, let's take a look. So this is a primary Dow stock, okay? Primary Dow, leader of the Dow, it's industrial stock. Here's the thing. For one, from a technical perspective, you have a lower high right here, established right here, 221.5. You shouldn't see a lower high in a leader stock. You shouldn't see a lower high. It's a sign of weakness. Now, it's fighting today. It's fighting for the higher low. Okay, fine. It's fighting, and the bigger picture is obviously bullish, okay? So you have a potential higher low. The question is, will the stock market hold up, you know, or are these things going to break? So if you're going to take a chance, at least this is a better place to do it, if you're going to do it. But at this point, you have two places to measure your risk, and that's really like the main point. Especially for a swing trade, 209, so you could kind of round that to maybe 2 even. And what's this low over here? 205. Okay, so this thing really has no business going below 200 or 205 if the market is going to stay healthy, right? Or the market's going to stay strong. This is a market stock. It's a market leader. So if this thing continues lower, then, you know, most likely the whole market is red. Now, again, a concern here is this structure right here, kind of like Bitcoin, right? Bitcoin has that big bearish structure, and then it's got the lower high. Whenever there's a lower high, it's reasonable to expect a lower low. Now, it's possible to get these conflicting situations. So like, okay, yeah, lower low, but the trend is bullish. The broader trend is bullish, right? So that's a conflict. The broader trend usually carries more weight, but it has to prove itself. So either you get that higher low here, you know, or you want to buy somewhere around here, you're looking at risk from 205 or 200. Okay, something around that. And in that situation, if you choose to take that risk, it needs to clear this high 221 half. Needs to take that out. If it fails again upon that breakout, that is not what you want to see. Okay? Because with a higher low, if you get the higher low established, it should make the higher high. That should be the next move, okay, in theory. So if it can't do that, then you have a problem, okay? You have a lack of follow-through, and this bigger picture, or this, not bigger picture, but this broader bearish structure may still be in play at that point, and that's what you want to control your risk on from the long side, okay? So thank you for asking. Remy, with the heat waves have been held, would you consider investing in ACE? That's an interesting question, Remy. I mean, that would not cross my mind looking at air conditioner companies, because, you know, this heat stuff is temporary. You know, it's not like a sustainable thing. It's not like a consistent thing. It's just temporary. So yeah, they get their spike, just like, you know, Bitcoin and the altcoins back in February, right? March, February, April, they were all going nuts, right? So Coinbase, just to give you an example, Coinbase published a financial statement before they IPO'd with this ridiculous profit margin. And the profit margin or whatever that they reported was due to that temporary spike that you saw on all the altcoins and all that other nonsense. Okay, but people are saying, wow, if they can annualize this, they'll be making billions of dollars a day and blah, 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 right? We all saw where Coinbase went. So to kind of give you an analogy, I would think of it as the same type of thing, right? I wouldn't go by weather situations like that. You know, usually weather has effects like on supplies of grains. You know, if there's adverse weather, it can affect the supply of corn, soybeans, things like that. It can affect those type of things, right? Cattle, whatever, like that kind of stuff. So those markets tend to be more sensitive to weather, and you can play, you know, because you're looking at supply and demand of the actual raw material. Here, you know, you're talking about air conditioners and people buying more air conditioners, but it's temporary. Keep in mind, a lot of people have air conditioners, right? Or you know, central air and all that stuff. So I wouldn't, you know, I don't know. I don't see the connection, or I don't see it being relevant enough. Okay, I could be wrong, but yeah, that's what I would say about that. You know, if you want to test your idea, you know, I don't like to discourage people. If you want to test your idea, if you have an air conditioner company that you're interested in. VA, cool, Virginia. If you have an air conditioner company in mind, take at the levels. In fact, if you have a symbol, let me know. We'll take a look at it. Let's take a look at a chart and see what the chart says. That's really the better thing. Like, because trying to apply logic, saying, well, you know, the weather this and you know, more air conditioners should be sold, or just like with the recovery play, right? Oh, people are going to go back to here and they're going to go back to here and they're going to go on boats and blah, 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 blah. Sure, that's a logical idea, right? And all the smart money was in on that way before it was obvious, because they had figured that out way before the retail trader. So by the time you figure it out, you go in and you buy it, you're taking it off someone's hands. Most likely, that's an institution that bought way before you, right? That's why I don't like those logic plays, because they, you know, you're usually, by the time you put those pieces of the puzzle together, the party's over, right? And you're just taking it off the hands of someone that got in much earlier than you. I like things that are not obvious, things that usually are out of play, or things that are in play but at an attractive level. I like to go by the charts, because charts, although they're not 100%, and like I said earlier, we can't see everything that's going on, at least they give us a better idea of how to manage our risk. And that's really what this is all about, risk. You know, people they come into this game with the wrong idea, and it's normal, right? They come into this game with like, you know, I want to make money. I need to make money. Stocks or investing, it's easy money. I just buy something and then it's worth more, right? That's the conventional idea, right? People think, oh, I'm going to invest, and I'm going to invest in a good company, and they're going to do well, and my investment's going to grow. Right? Okay, great. But the thing is, when it comes to short term, it can turn into gambling very quick. this game is not about making money, especially in the short term. It's about risk, right? So you really should always tell people, risk first. Risk first. Focus on the risk. It's the only thing we can control, all right? So anyway, okay, so what else do we have here? Any other questions? Let me know if you have an air conditioner company, a specific one, let me know, and we can take a look at it. All right, so good question there. Let me see what else we got. So I still have a few more minutes, and then we'll wrap this up. We have a small crew here today, but it's a good time to really take advantage of asking me some more involved questions that I usually don't have time to answer when I'm streaming on TradingView. So Remy, TT, okay, let's take a look. TT. See, this is good. We learned something, right? Oh, now that's interesting. I mean, look at that. That's a nice looking chart. So, I mean, this looks like it would be in line with your logic. Clearly higher lows and higher highs all over the place. And recently, I mean, look at this move. Now, here's the thing, though. Let's just look at this now. Now, logic aside, let's look at this from a technical perspective. So, you're at a potential resistance, right? It's trying to break. Sorry about that. I don't know if you heard that. A little nervous here. Anyway, so you get this high over here, 189, right? 189.5. And what's today's close? It didn't close yet, but it's going to close. A 186.5, right? Is that right? Hold on. This high here is 189.5, basically. Oh, today's candles, I'm looking at yesterday's candle. Today's candle's a little lower. All right, so my point is this. You know, if you look at this from a logical perspective, you say, yeah, right, air conditioners, people need them. You're right at the highs. So this is a great place to be getting out, especially if you're in from a much lower price. So where should you get involved in something like this from a technical level? Well, look at the supports, okay, 178.5. That's at least here, you have much better reward risk potential in that area if price can deliver such an opportunity. But buying it now, you're taking it off someone's hands that took that risk at those lower levels. I would never touch this. Even if it breaks out a little bit, right? I mean, look at this situation where we had yesterday. And this is a nice example. Closed strong, sucked a lot of people in, and now today you get this little inside bar, right? While that's not exactly negative, that can turn negative very quickly because something that's following through on a breakout should look like this. You should have another candle and it should close strong like that. That's what it should look like, okay? But it doesn't look like that. So instead you may get one of these situations from back here, right? Broke out. Oh yeah, great. People bought the breakout and then it turns red, okay? And then, oh, they hope. And then it pushes people out that either their stops are too tight or they didn't measure their risk right or they get margined out, whatever, and then it finds a bottom relative to this bottom back here. So that's why you're better off waiting, waiting for at least some sort of level, some sort of support while the trend is in your favor. So I hope that explains, and that's a great question, so I'm glad you brought that up. What's nice is, like I said, as a group, we get to look at things. People are looking at different stocks. I would never check out an air conditioner company. So it's nice to see, different ideas, and then we look at them, and then we learn something. Okay, so now, hey, if this thing goes back to that low, you have a potential trade idea, if it can reverse there. So thanks for bringing that one up. All right, so what else we got here? Okay, yeah, you're laughing at me. Yeah, I know. Hey, that was loud. But, it's like the weather here is a little adverse right now. So anyway, all right, cool. I'm glad the internet's working. So I love watching all your videos. Oh, cool. I appreciate that, Remy. Cool. All right, so any other questions? Any other questions? Again, great time to ask questions about, maybe technical questions about order types, basic stuff like that. It's surprising to me sometimes how people will ask me a question about, like an order type, like what's a buy stop, like stuff like that. You should know, if you're placing trades with real money, you should know those really basic things like an order type, all that kind of basic order entry stuff, because I mean that's you're moving your money around, right? It has nothing to do with making money, but it has everything to do with controlling, your money, right? So stuff like that you should know. Anyway, let me know if you have any questions. Let's just take a look around a little bit while I'm waiting for questions here. So how's VeChain doing? Let's just take a look. some altcoins. Again, following Bitcoin, right? Lower high, looking for the lower low. Okay. Let me see. Don, hey, Dan from Romania. Oh, cool. Hey, Dan, good to see you. Thanks for stopping by. Appreciate that. Let's see what else we could take a look at. So I like to look at this a lot, right? And this is the bond market. I like to look at this and see how it closed. While I don't trade on this information, it does help give me some sort of background or some sort of context to consider, right? When it comes to interest rates. Interest rates control the world. So with this situation, bond prices going higher, we have rates going lower, right? I expect certain behaviors to unfold from this, okay? Lower rates means weaker dollar and all that stuff. Stronger gold, right? Typically stronger stock market or inflationary scenario, right? So what's interesting about the bond market is typically the bond market is compromised of smart money. Retail traders don't really trade the bond market, okay? You don't see day traders day trading the bond market typically. You go to any day trader YouTube channel, they're always in these garbage penny stocks and all these other. You don't see them. Oh, I'm in the 30-year bond. I'm in the 10-year note, and I'm trying to make a tick, right? You never see that. So this means smart money. Smart money, institutions, hedge funds, big banks, governments, right? I mean, who throws around bonds? So smart money. If smart money is thinking or placing their bet on lower rates or whatever, that's what they're doing. They're pushing the rates lower. That means something. Now, unless this changes, we have to consider that, right? But now, when there's conflict, like the U.S. dollar, see, the U.S. dollar was kind of strong yesterday. So with bonds going higher, and bonds were going higher yesterday too, the dollar should have been lower than it is. So the dollar's acting strange. At some point, one of these markets has to make a decisive move, right? And then these are big economic factors here, right? The dollar moves one way in a big way, it affects other markets, right? So that's why it's a good idea to learn these relationships just as a background, not to take trades. I'm not going to sit here and say, oh, dollar weak, I'm going to do this, this, and this, and this, and this. No, it's more for a broad context, okay? So Remy, all right, I'll throw another question. Okay, other than your book, which I haven't gotten yet, can you recommend any other books on YouTube channel stuff? Okay, that's a good question. And, I was thinking about that. I'm glad you brought that up. So as far as my ebook goes, I'm not going to sit here and tout my ebook, but I do want you to understand the purpose of the ebook, and that is I put together that book to basically document the techniques that I've learned over the years that actually provide actionable value, meaning you can take that information and it's useful in putting together a trade, whether it's managing risk, whether it's anticipating a market move or looking at structure a certain way. It allows you to look ahead rather than behind, right? That's what I found, and I've tried everything, okay? So I can tell you lots and lots and lots of things that don't work. So that was the purpose of the ebook. So you're not going to, if you get the ebook, you're not going to come out after reading the ebook and say, okay, I have a magical strategy now, because there's no magical strategy. But what you will have are building blocks that you can then pursue further, like Elliott wave, using Fibonacci measurements, using support and resistance, using candlesticks. These particular tools provide some value, and when you put them together, they can provide some more value. But just keep something very important in mind. One technique alone, like let's just say Elliott wave, or some other technique, provides no clear advantage. Okay, that's very important, because you have these gimmick people out there, especially, and as far as YouTube channels go, I have none to recommend. Actually, you know what? There's one, I can't remember. There's this Indian guy. He's an Indian guy. And he's a teacher. He's a professor at the at New York and NYU. I can't remember his name. You may have to search around for that. But he actually teaches really hardcore fundamental ideas, and it may be hard to watch because he may be very dry at times. But that's true market stuff. Okay, he's not going to sit there and try to teach you magical strategies and magical patterns and like all these other guys do. I have 3 magical setups, for you to take, and you'll make money. I can almost guarantee it. Just make sure you read the fine print first, right? That's what they tell you. So there's one guy, and I'm sorry, I can't remember his name. But as far as YouTube channels go, you know, I would be very careful with them, okay? You're better off going for classic books. And there's one in particular, again, I can't remember the name of it. There's one book, Financial Guide to Professional Market Technicians or something. I can't remember the name, but it's a very good book. It's a textbook. It was written a number of years ago, and it covers a lot of these techniques from mostly a statistical perspective. Like it explains the technique or explains the oscillator or whatever, but then it gives you some statistical background, which is, you know, you need to know that stuff. Most of these things, again, don't work on their own because markets are highly random. Like, so for example, candlesticks. Candlesticks give us certain patterns, okay? Inside bars, pin bars, stuff like that. There are all kinds of patterns. But in and of themselves, they appear randomly. So if you take all of them, you can't make money. There's just no way you're going to make money. If there were any advantage to anything specific, like people bring up oscillators all the time. How about the RSI? How come you don't use the RSI? How come you don't use this? Because they see 5 other gurus who don't know what they're doing using an RSI. There is no advantage. In fact, oscillators kind of put you behind a bit because they'll only give you any kind of value that they give is going to be in a trend. But if there was any true advantage, right, some sort of clear, consistent advantage to using, they would not be available. They would not be available, especially for free. So you have to keep that in mind. All right. Advantage in the market is usually something you cannot see. You're not going to get it from an oscillator. So just something to point out. So thank you for asking about that. So again, if you check out my ebook, I just want you to understand what you're getting. I don't want to give unrealistic expectations, or people are like, oh, he's going to give me his magical secrets in his ebook. No, I'm giving you the things that I've observed to provide the most value. And you have to know what to do with that stuff afterwards, okay? But it's a good start. It's a starting point. So anyway, thank you for asking. Stell, can you please check, okay, BNB. All right, let me take a look. Current situation. Second question is, what do you think will happen if the stock market... Okay, those are some good questions there. All right, so let's take first look at BNB, USDT, all right, before I continue on my ebook rant there. All right, so, well, look, here's the thing. Binance coin, right? This thing was so hyped. Oh, they're going to do this, they're going to do that, they're staking this, they're giving you interest, blah, 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 and then blah, right? Following Bitcoin. This situation right here, similar to Bitcoin. Lower high in place, like Bitcoin. This coincides with 41K, 433 coincides with the 41K resistance, range resistance on Bitcoin. Right now, Bitcoin's trying to pull back. What is Binance Coin doing? Trying to establish a lower high, okay? Right in the middle of the range. You have this range right here, this range, and you're right in the middle of it, and it's trying to give you a sell signal. Bad place to be buying. And if you're in some, I hope you're not in some, but if you're in some, I don't know what to tell you. The thing is, you have a potential lower high. A lower low is likely. Doesn't mean you will get one. If Bitcoin breaks, this will most likely follow, because so far it's proven to be nothing but a follower. So if you take out this pin bar low here, 225, I'd be expecting Bitcoin to be doing something similar, right? Taking out 30K or something like that. So that's the risk you face if you're involved from around here. Hopefully you're not, like I said. As far as buying Binance Coin, right, if you notice these support levels, which coincide with 30K and 28.5 on Bitcoin, is also coincides with these old resistances back here. So if you're going to do anything with this coin, that would be the place to be looking, okay? If you're going to consider a position in something like that. But again, it's just a mini Bitcoin. That's how I view this. If it's following Bitcoin, it's just a cheaper version, right? So if anything, you shouldn't have both on. You shouldn't have Bitcoin and Binance Coin. It's the same position, all right? Just to give you some idea. So thank you for asking. Now, the second question is, what do you think, okay, what happened if the stock market gets into a bearish leg? Well, you know, it's hard to say because the relationship constantly changes, right? I mean, if the stock market goes into a bearish leg, look, the stock market has been in a ridiculously bullish leg, ridiculous because it never pulls back. And Bitcoin is struggling, right? Bitcoin can't even take out 41K while Nasdaq has been making all-time high after all-time high after all-time high. Now, if there's any relationship, the relationship is saying relative weakness, because Bitcoin should at least be taking out a resistance if they were moving together. So if Nasdaq breaks, S&P breaks, it's possible that you see that weakness play out in Bitcoin as well. Now they'll say, if you see that type of situation, they'll say things like, well, investors, they had to cover their margin calls by selling their Bitcoin for the stock market, and blah, 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 right? They'll say stuff like that. But the reality is the relationship seems to change a lot. One minute they seem to be moving together, and then they're not. And then they are, and then they're not. So I don't like to rely on that. I want to see what takes place if we get a real pullback in the Nasdaq. Now, going back earlier, if you look at this move right here on the Nasdaq, right, this pullback, which was somewhat significant, not very much, but it pulled back a bit, right? How did Bitcoin behave back then? What was that, May? I mean, we go back to Bitcoin in May. What was Bitcoin doing in May? Well, you had this move right here, right, middle. It kind of, I guess you could say, it kind of pulled back together, broke that 50K area. But as you can see, the stock market has rallied to new highs since, and Bitcoin is flirting with a low. So like I said, we have to see how that plays out. But I wouldn't really put any weight on that, and I wouldn't really make any bets on that. Treat each market individually as far as stock market and Bitcoin. I think you're better off doing that, because some news can come out that will change the Bitcoin situation, right? Some large player may come out and say something, oh, we're going to do this with Bitcoin. Next thing you know, the stock market's pulling back to 13.5 and Bitcoin's back to 41K, and it doesn't make sense. So I wouldn't place any bets on that relationship. Just observe it. So that's all I could really say about that. So thank you for asking. Let's see. What else we have here? So shorts. Hi, see, Mark, there's a Romanian majority of yeah. Oh, yeah, right. Have some fun in Romania. Okay, no problem. He's on his iPhone. That's cool. Hey, Travel, good to see you. Just out of curiosity, were you invited to the Mt. Gox affair? I'm surprised people even remember what Mt. Gox was. That was at the time, that was like the biggest Bitcoin exchange. I think they were, based in Japan, I think they were? No, I wasn't as involved as I am today. I mean, that you're talking 2015, 2016, or whatever. And when they have their problems around that time. So no, I wasn't involved in that at all. I wasn't invited to anything or involved. No. Yeah. So that's a good question. I don't trust Binance at all. If I have to be honest, I prefer. Okay. Well, it's hard to trust any of these exchanges, to be honest. And besides Coinbase, and the only reason why I say Coinbase is because they're now a regulated stock, right? The SEC watches over them. They have to report their finances and all that other stuff because now they're a public stock. These other exchanges, there are no rules governing them, whether it's Bitfinex or some of these other ones. They can do whatever they want. So if things get out of hand and they need to do something extreme, they'll do it. They don't care. There's no one telling them what to do. So that's as far as trust goes. But yeah, you really shouldn't trust anyone, really, to be honest. Because especially in that space, there's no oversight. So anyone can do and say whatever they want. They can move inside information around, whatever they want. They can manipulate whatever they want. And there's no one to curtail that or to regulate that. That's a big problem when it comes to considering these things as investments, right? A lot of people make this mistake where they think that, oh yeah, all these altcoins, they're going to come back and they're going to be worth this and that, and they have this great idea and blah, blah, blah. But they're not investment grade vehicles. I've ranted about this many, many times. Most of these altcoins they're these great idea projects. They don't have to report any financial statements. The lead developer team or whatever, they're not responsible for anything, okay? The developers themselves probably have a bunch of coins in a wallet somewhere, and they're just hoping to sell them to people, right? They're not some kind of CEO that's responsible and that has to answer to the SEC if they do anything funny. So that's the thing you have to keep in mind. That's not investment grade, right? Because they can just run away with your money very easily and say, oh well, the project didn't work out. Sorry. All right, we saw something like that with the dot-coms many years ago, and dot-coms were regulated stocks. They were legitimate stocks that, and they stole everyone's money and blah, 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 and they had to change the accounting rules after all that and blah, blah, blah. But these altcoins, they don't even have that. They don't even pretend to have regulation, okay? So that's an important consideration for investment. And the reason why I bring that up again is because if you're trying to invest in the long term, you really should consider solid investments like stocks that pay dividends and that have been around a long time, that lead their industries. There are many of those. They're not going out of business anytime soon. Even if the market pulls back really bad, they're still going to be around, okay? And they're not going to play any games, and they're regulated, right? That's really, you want to have your money, if you're going to tie up your money and stuff, those are better choices relative, to risk compared to something like an altcoin, which is like a penny stock or an over-the-counter stock, which they don't have to report anything, and they can do whatever they want with your money. So just something to keep in mind. I know a lot of those people wouldn't appreciate that I'm saying that, but you have to be realistic here, okay? And they don't care about the welfare of the people that buy their coins. They do not care. They're just taking your money. So as an investor, I at least want to know that what I'm investing in is at least, if I want to see a financial statement, I can see one if I want to, all right, and know exactly what's going on with the money and this and that, okay? Anyway, enough of that rant. I talk about that. I repeat that a lot. All right, let me see what else I got here. Good questions. I got some questions coming in. Ian. Oh, from Cairo. Welcome. All right. Could you take a look at HYNL? Sure. All right. I've seen you before. I didn't realize you were from Cairo. You may have mentioned that, and I don't remember. HYNL. Is that a coin? HYNL. Let's see. USD. HYNL. I'm not getting anything for that. HYN. Is that, I don't know if I have the right symbol here. I'm not seeing HYNL. No, I'm not seeing anything here. Maybe you can give me the right symbol. Maybe I have the wrong symbol. I'm not getting anything for that. Let me see what else I got. Hey, Travel, are you among those who believe that Bitcoin price is expected to close the gaps in the CME? No. That's a good question, Travel, about the futures. Sometimes you get these situations, right? And then people, they'll make an observation. And they'll say, oh, look, the futures, they closed here on Friday, and now there's a gap. And now on Sunday, they have to close the gap. Right, so they make a couple of observations, and then they think it's like this law or something, or they think it has to happen, or whatever. I think it's a coincidence, right? So that's why I don't like to get wrapped up in those things. And the reason is I don't like to have an opinion. Opinions can be, I've been doing this a long time, and that opinion game, yeah, when it works, you're like, hey, I'm smart. See, it worked out, my opinion. Yeah, cool. I told you the market was going to go higher. Right, but when you get married to an opinion and the market doesn't agree, and you stay stuck on your opinion, oh, I know I'm right, I'm just going to blah, 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 right? That bias can really cost you a lot of money. So that's why I don't go by any of those when people are saying, oh, this, or they all come up with some guru somewhere comes up with some, the PI oscillator predicts Bitcoin tops, right? And hey, at 65K, people were coming to my chat and saying the PI oscillator. And so some guru somewhere was bringing it up, and hey, it turned out to be right, okay? And it sold off from 65K. But even then, I will not go by that information. I need to make my own determination based on the factors that I'm used to pulling, right? That type of information I'm used to evaluating. I'm not going to go on because some big mouth somewhere decides that this is the new cool thing to look at, right? Never go by that stuff. You have to determine things at their simplest level, right? There's no magical oscillator out there. I don't care if you call it the PI oscillator. I don't care if you call it a stochastic, whatever you want to call it. I don't go by that stuff at all. So thank you for bringing that up. Okay, so here's that symbol again, HYLN. Okay, I'm going to try it again. Let's see, HYLN. Okay, there we go. I was putting the wrong symbol in. Okay, so what do we have here? Helion Holdings. Okay. So let's take a look at the bigger picture, first thing. So I see it's pulled back, right, significantly from what, October, whatever, right, that high? Pulled back significantly. All right, fine. consolidated a bit. Now, recently has changed. Why has it changed? Well, it took out this high right here, which was 1098. Okay, so that's interesting. You had this initial push, and we've seen a bunch of stocks, like especially the electric vehicle stocks, look very similar to this. I wonder if this is an electric vehicle stock. Maybe it is. And you now have a retest of that support. So if you're going to get involved with something like this is a possible failed low, right? Because you have this little higher low situation right here, which it should have made the higher high, but it failed to do so. So now it pulls back, and you have this green candle today. We just looked at another stock earlier too that looked very similar to this. I can't remember the name. Man, my memory today. So this would be an aggressive swing trade. If you take the break of the high tomorrow and use the low of this candle as a stop, you'd want to see the next series of candles make that higher high. If it fails up in here again, then you're looking at a problem. But theoretically, if you have the failed low, that should be considered a higher low established, and it should go for the higher high. So if you're going to take a risk, this is the place to do it. Okay, that low is at what, 10? So you can define that from around $10, maybe $9.50. You want to give yourself a little room, and the reward potential is what, $12.60. So you're looking at, what's this thing right now, at 10.06. So you're looking at risking maybe a maximum $1, and you're going for like $2, maybe $2.50. That's attractive reward risk. It makes sense. So I wouldn't disagree with this one. And it doesn't look like it's a market stock, meaning it's not really going to be very sensitive to the market. Again, I'm not familiar with them, but oh, it is an EV stock. Okay. See, and I mentioned that too. I didn't even know it was an EV stock, but I remember this chart pattern because it looks like Nikola. Okay, I mean, look at Nikola. Same situation, very similar situation, not exactly the same. I mean, what about Workhorse? Sometimes it helps to look around the industry. What about NIO? You know, NIO is a little more dramatic there. So these things tend to be flavor of the week, like cannabis, right? You know, cannabis is like in the garbage. Look at this. Look at cannabis. That thing sucks. But anyway, yeah, I just bring that up because these things tend to be flavor of the week. So if you're going to take a chance, this at least is a sensible place to take the chance. If it breaks lower, I wouldn't go into hope mode on this. I wouldn't sit there and not use a stop and say, it'll come back, because these things, especially if the broader market, you know, I wouldn't classify this as a highly correlated stock, but if there is a broad sell-off, usually a lot of stocks are affected. So you just have to be careful of that. But otherwise, not a bad idea. So thank you for bringing that one up. Travel says, you're right about opinions. Thanks. Okay, hey, no problem. Hey, thanks for stopping by. Always nice to see you. Okay, cool. Elizabeth. And then, you like that, Elizabeth? Yeah, B&B. One B stands for blah, and then the N, and then the other B stands for blah. That's my bad joke for the day. Okay, blah and blah. Jumia. So isn't it Jumia, the stock that we looked at earlier? Maybe it is. Let's take a look. Which is not even an electric vehicle stock. You're right. That's a good observation, Mario. Yeah, Jumia. Very similar situation, but this is not an EV stock. So this, again, this could be a function of just the stock market. I mean, you know, we go to these tech stocks, we go back to the Nasdaq, and as you can see, the Nasdaq tried to have this little bounce today, right? This pin bar situation. And people may say, oh, that's good. That's a bullish pin bar, right? Right, but the location is not good. If this pin bar occurred at a support, I'd be like, okay, we have a buy signal developing on our hands, but not at near an all-time high. I'm just, like I said before, I'm skeptical. I don't like buying anything, unless, again, if it's a day trade, that's a different story. But I'm not talking about day trades here. I'm talking about swing trades. Okay, so thanks for bringing that up, Mario. Yes, so the chart pattern is similar to Helion, or whatever the name of that stock is. It's very similar. Just industry is not the same. Okay, cool. So, all right, everyone, I got to wrap this up. Now, I really appreciate everyone's great questions. Okay, we had some nice questions here. It's nice when I'm not streaming on TradingView. I have the opportunity to take my time a little bit more and answer your questions in more detail. So I hope people get more out of that. You know, when I'm on TradingView, I have so many questions, and I'm trying to answer as many as I can. the goal of these streams, again, is to give you perspective so that you have some realistic expectations for the next few days going into the coming week as far as support and resistance levels and some potential ideas. You know, out of all these, like Jumia and HYCLN or whatever that thing was, those are some potential ideas that you can consider on your own. I didn't make any calls for those, but at least it kind of gives us an idea, right? Rather than chasing some ridiculous stock that, you know, maybe on some hype news, right? Oh, buy Amazon, it's made new highs today, and the news just told me so, right? Instead of stuff like that, which is reactive. And if you want to win in this game, whether you're a swing trader, whether you do yourself a lot of good if you avoid reacting. It's human nature to react, especially to information that we can see. Okay, we're just reacting to a visual thing, but the markets are very deceptive because we cannot actually see what's driving the market, like I said before. So we grasp for reasons. We grasp for news. News is irrelevant, okay? We can't see the actual forces, the order flow, the orders, the buy and sell orders that are actually determining where the price is going to go, all right? And in order to see that, to get valuable information out of that, we would need to see who the accounts belong to, how many orders they have distributed around the market. Is that account a retail account? Is it an institutional account? How much money is in that account? How many market orders are being processed in that account each day? Like, that's the kind of information you need. No one has that information except the exchanges and the brokers, right? And they're not going to share it with you or me. So that's what we're dealing with here. So I bring that up again, not to try to make it sound like there's some kind of magical way to do this. I'm just bring it up so you have an idea of what valuable information is and what valuable information is not, okay? News is not valuable information. An oscillator does not provide any advantage, I'll say. It can provide some value, but there's no advantage. And if you don't have an advantage, then you add the costs that are in this game plus potential losses because you don't always win. It's a formula for losing money. Okay, so that's why you have to focus on the risk, and you have to be able to take those risks in the face of incomplete information. That's the best we can do as a retail trader. All right, so I'm going to leave you with that. Again, I want to thank you all for your great questions and for spending some time with me here today. I try to stream twice a week. Usually on Mondays, I'm on TradingView and on here. And then usually on Thursdays, I'm just on here. It's a more intimate crowd, and I get to spend more time with questions. Plus, we have the what do you call it? Talking Markets with Mark and Andrew. You know, Andrew comes on, and we talk about things from more of a fundamental perspective at times. And this and that. It's just a different point of view. Sometimes we get Henry on there with some interesting ideas, and we share our trade of the week, which is a free trade that we send out. So if you're not a member of our mailing list, you could just go to Greenbridge Investing. All the links are in the descriptive portion of this thing here. Just click on there, show more, and you'll see all the links. You could sign up as a free member or whatever, and you get that email. Now, look, I understand there's been some problems with our email situation. I'm looking into that because, you know, we send out one email, people get it. We send out another email, people don't get it. Technology, you know, what am I going to do? But anyway, just so you know, I'm working on that. So, you know, and I'll get back to you on those emails. So, again, thank you again for those that reached out. Okay, so I'm going to leave you with that. Thank you all again. Enjoy the rest of the day or the rest of the evening, wherever you are in the world. And thank you very much.